Hello guys, today we have a new session and all is about why to follow market indexes. You know, a lot of people, they trade but they have no idea what's going on in the market. Now, if you are a day trader, it's something different from when you are a swing trader. So always when I'm talking about trading, I always sometimes I talk specifically about day trading. Sometimes I speak specifically about swing trading, which is short-term trading, where you hold the stock for many days or weeks or months. So there is always a difference. That's why always when I speak, I try to make sure you understand the difference. Now, why to follow market indexes? It's just for swing trading, for short-term trading, you need just to know what is the mood of the market. Where is it going? Are we in an uptrend? Are we in a downtrend? Or are we just trading into a range? It means few days up, few days down, like last year. Last year, most of the year was too bad. 1 week or 2 weeks up, 1 week or 2 weeks down. So last year was very, very difficult for people to trade. Hello, Samrat. How are you? Now, at the end of 2018, in the 26th of December, there is what we call a reverse. Now, what is a reverse? It means a change of the whole direction of the market. Here, I'm speaking about USA markets. USA markets, at the end of December 2018, they were going down for 2 weeks or 3 weeks. Okay? Now, in the 26th December, they stop going down and then they go up. Dow Jones have gone up for that day 1,000 points. It means one of the strongest days in the history of Dow Jones. It's too much. $1,000 in one day, which is too big. Now, after a few days, I begin to talk about a new trend after the reverse. It means since the trend was going down, now it is going up. I spoke the first week. The second week, I say the market is strong. Try to see stocks, buy and wait until last week, when the market stopped going up and it goes for 1 week down, and they say and the stocks go down for 1 week, and then on Monday, it means yesterday, the stock, I see that there is a small reverse. And this when the trend is going up and then it goes down, this is called a correction. A correction is just some people, they fear that the market will stop going up, so they begin to sell. So it's as easy as that. Okay? A lot of beginners, a lot of people who are always scared of the market, they when they see some profits accumulated in their trades, they want to sell. This is just psychological. Okay? And some, when they see that 1 day, 2 days, 3 days, the stock market is going down, they get scared because they see that they are losing a lot of profits. So they sell also. Yesterday, there is a big green candlestick, which is a reverse. Now, for me, I hope it can continue up and up and up. But understand that the market, we try to follow the market indexes, but we should always, when you do an action, we should wait. When you buy a stock, you should wait a few days and see if you are right or you are wrong. Now, why we look at this, the most important one that always the people look is the Dow Jones, S&P 500, and Russell 2000. Why? Because they give you a general idea about what the market is doing. Now, some might say, why professional only look at outperforming the S&P 500? Now, understand, S&P 500 is the medium big corporations in America. 500 big companies. Now, understand that we have Dow Jones, we have only 30, but they are the biggest blue chips in America. It means in each company represents a sector. That's why Dow Jones and S&P 500 are the most seen in America. S&P 500 because it is 500 biggest companies, and the average gives you a clear idea how is the market doing in terms of percentage. Now, this is just a way professional look, and this is the media when they look at S&P 500. They say if you can get better than S&P 500, it means you are an excellent trader, or you are an excellent investor if you can outperform S&P 500. Okay, because it is the average of the whole market. If you can get more than that, what does it mean? It means you are a successful investor or a trader. It is just an index that the people see, and everybody looks at what S&P 500 is doing, what blue chips are doing, which is Dow Jones, and what Russell 2000 is doing. Russell 2000 is lighter because we have smaller companies. So these smaller companies are lighter. It means they are more volatile than Dow Jones and S&P 500. But in general, if you want to know, try always to look at Dow Jones or S&P 500. They are the same. Okay? I can just show you from the chart that they are mostly of the time they are doing the same. But Russell 2000 is going quicker, either up or down. Okay? So let's just show you in a minute how this Dow Jones is doing. Let's see the market ETFs. So let's see the market. Look. Okay. So, as you can see, this is the trend. This is the downtrend I told you about. Okay. And this is the uptrend. Now, when the trend stops here, it begins going down into a correction. It's a very long correction. Now, this is Monday that I talk about, 11 March 2019. Now, today it goes just 0.35%. It means it's not that big deal. So, if the market continues to go down, it may cross the resistance line. Now, the resistance line, I put it here as 266.05. 66. Let me see if it is 66, yes or no. So no, we should take this here. 269 28. So 269 28. Now this is the high of last year. Okay, this is the high of last year. Now the market has been going down last year in 2018. Now we are in 2019. So we are on 255.86. So we have 14, nearly 14 points. It means $14, and we can cross this line. If we cross this line, it means that we could have a very big, strong trend, and it could be a bull market. Now, what if the market collapses and crosses the line? We might go into what we call a downtrend. Okay, a downtrend, not a bear market. No, a downtrend. Because a bear market is when we cross the last year low, which is 216.97. Here, this red line. This is, if you cross it, it means we are going to what we call a bear market. Okay, but right now we are looking at this. Now, as I told you, let's see, for example, what the S&P 500 is doing. Let's see. Now, S&P 500 today, it goes $1 or more. It means 0.38. So the 500 stocks are doing better, little better than Dow Jones. But it's nearly the same. It's not a big deal. 0.38% is nothing. Now let's see Russell 2000. Russell 2000, 8 cents, 0.05. The market is not that strong. So understand that Russell 2000, as I told you, it has gone so far up last year. It has been doing better than Dow Jones and S&P 500. Okay? So that's why it swings a lot. It swings more than Dow Jones and S&P 500. Why? Because the stocks are small. So the traders can move them very, very fast up or down. So what we should do now is just wait and see if things go up or go down. Okay? So this is all about the indexes. Okay, so I want just we are now at 15 minutes. I just try to answer one question or two, and then we can go. We can just finish this session. Now, one famous hedge fund said, "We will back to December lows. We will see in bear market." Okay, now listen. No one knows the future. We have a big trend right now. We don't care about what people say. Okay? We don't care. Who cares? You see that 9 months and the stock market is good. And someone say, "Oh, we are going to a bear market." Okay, when we are in bear market, we say this. We are in bear market, but we are not. So how can you know what will happen? And what if the stock market goes so good in the future? What he will say? Okay? This is just people, they talk. They talk about the future as if they know the future. If I know or someone knows the future, I will go to penny stocks and I see what is the penny stock that it is manipulated. It goes from $1 to $10, and I sell everything I have, and I put all that money in that stock. And tomorrow, from $1, it goes to $20, and I will become a billionaire in a few years, or 1 year or 2. This is stupid. If someone knows, if you can't know what the people will do in the future. So stop watching these fools in the media. They just talk. Okay? Now you ask him why. Why you say that? Does he know what mutual funds are doing? Does he know what traders are doing? No one knows. Okay, so we try to not speak about this until we see it. When we are in the bear market, we say we are in bear market. When we are not, we don't say it. Okay. Another question from, why do we have New York Exchange and Nasdaq instead of one? No, there are two companies, two different companies. Okay? They have listed stocks. Okay? So a company, when it is private, and when this company wants to go public, it can choose between these companies, because between these two companies, there are three, not just two. We have New York Exchange, we have Nasdaq, and we have the American Exchange. We have three. So you choose one of them. It's like when you want to buy or sell stocks. Why do you go to this broker? We don't go to this broker. Why we have a lot of brokers? Why we don't have only one broker? Because a broker is just a company that do the same service as the other company. So understand that we have three major exchanges. Exchange is so big, and companies, their rules are different. The rules of accepting a company is different. Okay, so New York Exchange is, most of it is insurance, banks, and other stuff. Nasdaq is all technology, stocks, and drugs companies. Okay, and the American Exchange is for mutual funds, for ETFs, and so each market has a lot of stuff that it is so different from the other stocks. But although all they have stocks, all they have different stocks, but the majority, as I said. Another question, do you read investors.com? No, I don't read it. I don't read it, and I don't care what the people say. Okay? Because I don't do investing a lot. And if I want to invest, I choose my company by myself. I don't need a stupid person showing me what company to buy. If he knows what companies are good, he will not say that, because it's a very dangerous business to take advice from someone for free. It is not. Okay? Do you trade cars? No, I don't trade cars. But sometimes I give example of cars because a lot of people, they know about the subject, about brokers, about what is the difference. I can speak about restaurants, or I speak about lottery, or companies, or about, but these a lot of people, they don't know about. But cars, it is very simple subject, because when you want to buy a car, most of the time you go to a dealer. Okay, you go to a dealer. Why you go to a dealer? Because he has a lot of cars to choose from, and he has, for example, ability to give you the car for payment installment from credit cards and so on. So this is why I do an example. Now listen, we are in 22 minutes. I will just see these two stocks that they tell me to see it. So the first one is ZS. Okay, ZS, someone told me to see it. Yes, it's a stock that it has a gap up and it's going up, which is very good. Okay, and the other stock is STNE. STNE. Okay. Now listen. STNE, the first thing, it is an IPO. Now, what does it mean, IPO? It means it is a company that it is new. It was launched on the 25th of October. It means last October on 25. And the stock has been going down, and now it has been going up. So we will never know where this stock is going. So you should have a way to enter and a way to exit. And this is what I teach. Okay? So let's finish this. The last question I can answer is, which stock are you thinking to buy now? I don't think to buy any stock because I don't have money. All my money is in some stocks, and from 2 weeks or 3 weeks, I didn't sell anyone. Okay? So I am into some stocks and they are doing very well, so I will not sell until there is something that I will sell off. And listen, for me, when I want to buy a stock, I go to either to my stocks that I put into a portfolio. I look at them because I like those stocks, or I go and I scan for stocks daily around 3 o'clock, and I find stocks to buy, and that's it. Because for me, finding stocks is the easiest thing for me because of the criteria and the signals I use. Okay, so that's what I do always when I need stocks. But understand that sometimes 1 week, 2 weeks, sometimes 1 month I don't buy, I don't sell, because the stocks that I have are doing so good. Why should I sell them? Until there is a problem in the stock, in the trend, then I will sell. But if there is no problem, my stocks are going up, I don't sell. Okay? So please, guys, try to see you tomorrow for another video like this. And thank you very much, because I want to make these videos smaller, not to talk too much. Okay? So thank you very much, and see you tomorrow.